All right. Um, one of the things, as I was just mentioning, is that um, how I trade is very mechanical. It's very mechanical. Um, I trade, my strategy is based off of market structure and price action, or just market structure. Let's just say market structure. Um, and what that means to me is that the market moves in waves. I'm not sure if you've ever seen, um, if you've ever watched a YouTube video, or I know that I'm going to be posting some YouTube videos, and you'll see people talk about the higher highs and higher lows, right? If it's bullish, and the lower highs and lower lows if it's bearish. So, with that being said, this is a higher high. I mean, this is a higher low. This is a higher low. This is a higher high. This is a higher high. This is a high. And then this is a lower high, lower low, lower high, lower low, and then a swing. And I mentioned on the Sunday call that I pretty much call those the swing highs and the swing lows. It's just easier, one, for me to say. Um, and um, and that's just whenever you see me marking up swing high, swing lows, swing highs, and let's just copy and paste here. This is a swing low. This, this is another swing high. And this is a swing high. Okay. And then vice versa. I just call it a swing high or a swing low, mainly because it's just easier for me to say. So this is a swing high. This is a swing high. And then this is a swing low. And then this is a swing low. And then this is the final swing low. Okay. So with that being said, and let me move this up. With that being said, there are a couple of things. The market is never moving this perfect. Okay. Never, ever, ever. You will never see and I won't say you won't ever see it moving this perfect, but you have to train your eye to identify these highs and lows. And I say that because within these highs and lows, so between this low here and this high here, there are going to be, so let's just say this is on the daily. And then I go down to a 1 hour, a 15-minute, a 30-minute. You're going to see this. You're going to see all these little highs and internal. I thought I turned this magnet off. I did. You're going to see all these internal swings within this leg between this low and this high. Does that make sense? Does everyone understand? And I'm going to show it to you in just
Yes.
on this chart. So all these are considered internal. This when it's within one leg, it's considered internal structure. When it's higher time frame, it's considered external structure. So You won't hear me say external a lot, but you will hear me say internal a lot. Okay. Now, I'm going to take that away. Wait a minute. Let me just move it to this. Oops. Let me just move it to the side. Okay. Now, once price goes up and gives you a pullback, this is currently a swing high. I mean, this is currently a high, right? Once price breaks this high, and for me, I like to see a break on a 1 hour or 4 hour. And I'm going to try to jot down notes as I'm going. A break of break of break a break of a swing high or low equals a break of structure. So this is our swing high, and then price broke above this, above here. Now, this is not a swing low. This right here is not a swing low until you get a break of structure. And the reason why that is very important is because as price is pulling back, pulling back, pulling back, pulling back, we don't know if price is going to break this high or if price is going to come and break this low. So whichever one happens first. So if price is going bullish, you're expecting a pullback and then a break of a high. When price, and let me take that. When price is going bullish, expect a break of a swing high. Okay. And then when price is going bearish, expect a break of a swing low. Okay. So once price is pulling back, like I said, we don't know if it's everything down here is going bullish, bullish, bullish. We're expecting this pullback to then break this high. Now, it may not happen all the time. Like this is when you start possibly losing a trade. And it's okay to lose a trade because if you're trading the trend, if you're trading what you see and not what you think, you're going to win 80-90% of your trades. Okay. So once price broke this high, this officially became a swing low. Okay. This officially becomes a break of structure. And then you have your swing high, right? So then price starts to pull back again. We don't know if it's going to break this low or we don't know if it's going to break this high. But once it broke this high, this became your break of structure. And this officially becomes the swing low. And let me just move it over. This officially becomes your swing low. Okay. Does that make sense to everybody?
Yes, it makes a lot of sense.
Yes.
Okay.
Yes.
All right. Now, when we get a break of structure, we're generally looking for price to pull back, to give us a deep pullback. And I'm gonna show you the fib. I know I showed the fib the other day and I hadn't talked about it yet, but we're gonna get there. Once you get a break of structure, you're expecting a pullback to um what is considered, if you're bullish, let me write this. If you're bullish, once you get a break, and I just usually just say BOS, a break of structure, look for price to pull back to a discount area. Okay. And I'm just going to set that there. Now, the discount area is anything that's from the 50%, 78, 50%, 618, 78, or 88. Okay. So when price pulls back, and I'm going to show you you can either set a limit, um, and then or you can wait for price to shift structure, and I'll show you what that means in a few. Um, to then take the trade. Okay. I like for price to pull back to the 78 or 88. That's my preference. That's my preference. And it's going to be up to you at some point to
Can you tell us why you prefer to wait till it gets to 78 or 88 versus, but 50 to 61?
because for me, I've seen too many times where price will get to the 50, 61 and maybe push up and then push back down. But it all depends on the structure that it's in. So, and we're going to get to that. But I've seen like Todd is he's if it comes back to the 50% 618 and he sees whatever he's looking for, he'll take it from there. But I've seen too many times that price would come to this zone, right? And then push up and then push back down to here. It's almost like it is a zone where it creates liquidity, meaning like equal lows or equal highs that it's going to come back and get. Now, price doesn't always come back to the 78, but I think it's about a 50-50 chance that price may come back to the 78. So, with that being said, I usually, and there's something that I look for once price breaks structure, there's something that I look for to see if it's going to come back to that zone. Now, generally, I don't have to use a fib, but I'm going to show y'all how to do it. Um, so if price did, and what I'm looking for, because I think we talked about this on Saturday, is the order block. I'm looking for an order block with the imbalance or a fair value gap, right? We talked about that, didn't we? On Sunday.
Yes,
Yes.
we did.
Okay. Okay, good. So generally, once I get a break of structure, I look for a um I look for price to if I see a order block with an imbalance or a fair value gap in my 78 or 88 zone, I'm marking it up and I'm setting my limit. Now, one thing about me is I am a very patient trader. Like I do not have to be in a trade every day. I don't even have to be in a trade every week because I know that once I get in the trade, and this is called the optimal trade and entry. Once it pulls back to this zone, it's one of the optimal trade and entries, right? I know that once price pulls back to my optimal trade and entry and I take it to, so let's just say this was the optimal trade and entry. I'm going to cover my low, my swing low, and then I'm going to take it to my swing high, right? So this was a swing high before it was a break of structure. So let's just pretend like that's our swing high. Let me change it so everybody, okay? So once this happened, this pulled back. This hasn't happened yet, so we're going to just slide that over, okay? So once this break of structure happened, I then look and I see that I have an order block and an imbalance at this zone. I'm marking it up, and once price starts to pull back, again, it may not pick you up, but when it does, and you take it to your swing high, it is like a home run out the park. And I just said something sports related, which I don't even watch sports, okay? Um,
I
but
just have one question, real quick. I'm sorry, I don't mean to cut you off.
yes,
The order blocks, are they always at the swing highs and lows?
generally, yes. You're going to see
Okay.
some in between, though. You're going
Hmm.
to see some in between, but
Hmm.
that's why you have to master knowing your swings
Hmm.
so that you're not tricked out the trade. Because remember, I said in a bullish market, you will see some bearish order blocks because it'll try to trick you into getting in a sell. But if you're bullish, you want to continue looking for bullish structure. You want to see price go back in a bullish direction before you get in a trade. Now, if say for instance, I see this order block, and let's just say when I did it right now, this is saying 129 pips, right? So let's just say that's too many pips for me because and I'm going to show you how to do it, but at some point you're going to have to analyze how much risk you want to put in, meaning how much you're willing to lose, right? So you can either wait for price, you can either set a limit at the zone and and take the risk, assume the risk, or you can wait for price to get in your zone, go to a lower time frame and look for a market structure shift. Now, what is a market structure shift? A market structure shift, or MSS is how you'll see me put it, is when overall price, so like the overall move is bullish, right? This is the overall move. When overall move is bullish and when let's see how I want to say that. The overall move is bullish, and when you get a pullback and see when you get a bearish pullback, that's what I want to say. When you get a bearish pullback and you see the market shift back to bullish, that is a market structure shift. And I'm going to show it to you on the charts in just a second. I'm just gonna put this all here so I can know what to go to once I show you the charts for real. So that means once price gets here, if you don't want to set the limit, right? Price is going down, it's pulling back. Why is this thing acting like this? I don't have a magnet on. Um, okay. Um, let's see. So once price, I don't know why this thing is acting crazy, starts to push down, say it's in my zone right here. Hold on. I gotta figure out why this thing is, none of the magnets are on. Okay. Let's just say, where did I put it? All right. Let's just say I'm gonna draw this zone down here. Okay. So if you're gonna wait for price, price is pushing down into this zone. Okay. And it pushed down into this zone, and you had a break of structure. So once you get the break of structure, remember, this is your swing high and this is your swing low. Once price breaks that high, ugh, that is your market structure shift. So you got to have a break of structure, and then you have to have a shift in structure. Once you get that shift on a lower time frame, I usually watch it on the 1 hour or the 4 hour. Then I set my limit. I look for the same thing. Who knows what I look for once? Oops. Oops. Oh, okay. What's going on? Why is it trying me today? All right. Who knows what to look for once you get a shift in structure? The shift in structure is just like a break in structure. It's just that you're saying break of structure when it's going in one direction. You're saying a shift when it turns around and goes in another direction. So, what do I look for once I get the shift and or break in structure?
Another order block?
Yes, with a what?
Oh, I don't know.
You know. Come on, you got it. You
Uh,
got it.
um,
Anybody help him? Somebody help him. You're gonna look
Are we
for,
talking about the order block?
yep. But what is it with combined with the order block that you have to look for?
Is it
um,
something that you taught us on Sunday?
Uh-huh.
Oh no, I think I know what you're talking about.
I just said it today. Mm-hmm. An order block with a
But
fair value gap or an imbalance.
um,
Okay. So, and why you're looking for that is because usually once you get an impulsive move, and I'm going to show you an impulsive move. So here's one right here. Once you get an impulsive move, it leaves this gap right here.
so I was thinking stop loss, but that's not correct. So you're
Nope.
saying fair value.
Yep. So once you get an impulsive move in the direction of overall price, and once it's in your POI, which is your point of interest, which is my point of interest is somewhere between the 78 and the 88, right?
Mhm.
Once I get an impulsive move and I get an order block, now I'm looking at this one, this is bearish, but I'm not looking for a bearish order block. I'll be looking for a bullish order block in a bullish market. But this is I'm just showing you what this fair value gap is. And matter of fact, let me make it a little cleaner. Um, uh, just make that a little cleaner. Okay. So you have a gap from here to here. Oh, wait a minute, hold on. Okay, so you have a gap from here to here. This little gap right here is the fair value gap or the imbalance. And I'm telling you how you will see it. Like if you're ever watching out there watching some YouTube videos or you hear somebody else say it, they're either going to call it a fair value gap or an imbalance. Fair value
And what does that do? It helps you.
gap. F. Okay. Oh, shoot. Hold on. Hold on. It is a sign that price is starting to move in the direction that you're looking to take your buy or sell.
Okay.
Okay. So, like for instance, if if this was the impulsive move up, right? This was the bullish structure. Price pulled back. You see there's a order block with the fair value gap right here. Oops. You see this this is the order block. This is the fair value gap or the imbalance, right? Because price did now if price had pulled all the way back, I would sometimes you can still use it all depends, but this is what you really want to look for. This is it makes the probability of your trade even higher, of your trade playing out even higher. So this is the zone that you're looking for price to pull back to. Now, you see it did not pull back to right away, right? But now that we're pushing over to this way, it pulled back in. This is our, so if we're looking at price pushing up and then pulling back and breaking structure. So at one point, this was the swing high. And then this was our swing low, right? So once price broke this swing high, this became the break of structure. Once you get a break of structure, this is what I do. As soon as I get a break of structure, I immediately look for my demand zone. And remember, your demand zone is your buy zone. I will mark it up. And once I see price, well, you can do one or two things. You can wait for price to get back to the zone or set a limit and take it back up to this highs, right? So if I were to have waited for price to get back to that zone, this is what I would have seen. So I didn't get my break of structure is a small here, right here. Price pushed up, price could have pushed back down, but it did not. It broke structure in my zone. You always want to look for price to come back to your zone. Don't try to trade the middle. Okay. So price broke structure. So now if I go down to the 15-minute, let's see if it's going to show me. Okay. I don't think it's going to show me. Nope, it's not going to show me. This right here means there's no more data on the lower time frame because we're so far back. But let me see if I can get it on 30-minute. Okay, got it on the 30-minute. So once price broke structure, what am I going to do? Once price breaks structure.
You looking for the demand zone?
Yes. So price broke structure here. So, and I'm looking for the demand zone within this structure right here. So as soon as price broke structure, I'm immediately looking for the demand zone. Now, usually I'm on the 15-minute, but this is not letting me go to the 15-minute. But I already know that the 15-minute is going to be here. It's going to be an order block on the 15-minute with the imbalance. You ask me how I know? It's just, I've just been doing it for so long. I just know, right? So I know that price is going to pull back to this zone right here and then take off. And that's exactly what happened. It pulled, once you get that break, mark up your supply or demand zone. You can wait for it to pull. Like I said, I'm a patient trader. There's a saying that the patient trader gets paid. There's a saying that the patient trader always wins. So I am going to be patient enough for for price to pull back to this zone, and I can cover my low depending on how many pips that is. What am I on, GJ? Oh, that's yeah. So, and then I'm going to take my profit to, let's go up, let's go up. Okay. So if this was the structure and price pulled back to, and also I'm going to fib it so you can see that it's at the 78 or 88. You see price came back to the 78 right here. Matter of fact, it even came back to the 88. You can't, let me just move this so you can see it. It even came back to the 88. And where you're going to target is the swing high. So this was the break of structure. This was the swing low. This was the swing high. You want to target that swing high. When I say this is wash, rinse, and repeat. Now, I mentioned that the market is fractal. So whatever happens on the higher time frame also happens on the lower time frame. And what I mean by that is, let's just say this was your structure, right? Or okay, that was your structure. This pulled back to the 78 or 88. You want to do the same thing. Once price breaks structure, you look for a zone. See, and this is one of these zones that price didn't come back to, right? It came back when it tapped here and then left. But on the 4-hour, and this will all determine if you're a swing trader, if you're an intraday trader. I don't teach scalping, but I mean, I'm sure it's the same process. Okay. So with that being said, on the 4-hour, we have structure here. And then price broke structure, right? So what am I looking for? I'm looking for order block with the imbalance. So I would be looking for price to pull back. Again, you see how it missed it right here. And it's okay if it missed it. Do not chase the market. Do not chase it. That's how you'll get messed up. So there was a structure here. There was an order block here. And you see it tapped you in like sniper. So where would you take it? You would take it up to this high. So your entry would be here, and then you take it up to this high. So that means, and let me use this. So your entry would be here, and then you would take it up to this high. Okay, that's 634 pips. So price came here and then took you out the trade right here at this swing high. Let's see how long that took. That took approximately 18 days. That is more of a swing trade, right? However, once you got in, you were never in drawdown ever again. Ever again. So again, if you see another break, and we know that we're targeting this high, once you get that break, you look for an order block that didn't come back and get you. So once it breaks, you might as well just cancel that order. Once you get another break, here's another order block. It didn't come back and get you. So you might as well cancel that order. Okay. And then as this is consolidating, we know the target is here. So once you get closer to that zone, there's no need to try and trade until you get past that zone, till the price breaks this zone, right? So this is your structure. This is your internal structure, because remember, this is the move, this was the move. This was the move up. It pulled back, tapped you in, and now you have this structure here. And this doesn't break, so this pulled back. This did not break until up here. So all of this is part of the leg until you get a break of structure. Then you got to pull back here, a pull back here, then this pullback. And this would be considered the shift in structure. Like price closed below this low, this swing low, you got the break of structure here, the swing low, the swing high. Once price shifted structure, you can trade the pullback, but we know that price is still bullish. So, well, it became bearish. It really did become bearish. Okay, I see what happened. Higher time frame external structure was this right here. This is here, 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 and here. So that means price should have been pulling back to this zone right here, which it did over here. Okay. It is going to get confusing. I'm telling you now, it is going to get confusing. But we will master market structure on a higher time frame zone, on higher time frames, and on lower time frames. Now, we see that this is a structure here, and I wanted you to see how it changed, how the actual structure changes when you go to a higher time frame. Like you start getting rid of the noise. You see how this is just here. It's pushed up, pull back, and then pushed up, pull back. So it looks a lot different when you're on a higher time frame. Once you go down to the 4 hour and the 1 hour, you start to get a lot of noise. You start to get all these little tiny moves in between. If you just master and stick to structure, meaning, let me use so this broke structure, which mean that made this the swing high, this the swing low, this was the break of structure. And why is that doing that? This the swing low, and then you had this shift in structure, right? Soon as you got that shift in structure, you mark up your demand zone and you look to trade from this zone. Here is an example of if you're going to wait for price so once you mark this up, one or two things. You can set a limit and you always have to put your stop loss below the swing low, right? You always have to put your stop loss below the swing low. Or you can wait for price to get to this zone. Once you wait for price to get to the zone, that's when you start looking at your structure. And the last level of structure, because price broke structure here, which made this the swing high and this the swing low. And then you got a market structure shift. Once you get that shift, you can mark up your demand zone, and it's either going to come back or it's not. If you seeing structure forming, for instance, this was a break of structure, you look for your demand zone. And I'm going to talk about if you don't see an order block, you look for the last up candle, down candle before the up move, before the impulsive move that broke structure. You can mark that zone up too. That's the demand zone. Some people call it an order block. Me, I told you I need to see, because I need to see two different color candles. That is why I mark this one up. But again, you have to see the break of structure first. You have to know, once you get a break of structure, mark up your zones. Once it gets there, identify the structure that's in there. If this is a break of structure, this is the swing high. Internal. And matter of fact, let me mark it up as an internal swing high and then the swing low. Okay. Soon as you see that shift, because you know you're supposed to be going bullish, that's when you can start taking the buys. And you can stay in up to, and it's up to you how far you want to go. If you don't want to swing it, you have a high here you can take it to. You have a high here that you can take it to. All the swing highs that you identify, right? So you have this here and then here, and then here, and then here, then here, then here. You can take your profit at any of these highs. It all depends on the type of trader you are. That's 330 pips. This is 464 pips. So it's up to you where you want to take it. Even if you just want to take it up to this high, it's 194 pips. Again, that's all dependent on the type of trader you want to be. Does that make sense?
Yeah, I think so.
Now I get it. It's going to be confusing. I know it is going to be confusing because you're going to be like, well, wait a minute, where am I? Why am I? Trust me, I know I've been there. That is why I started learning market structure, trying to understand market structure because I know that it is definitely key to making you a successful trader. And when I'm seeing all these zigzags and zigzags and whatever, and I'm thinking it's buying when it's really selling, and because I didn't look at the higher time frame to see where I am on the market on the chart, like um it is going to be confusing. But by the time you leave here, this group, you're going to understand the market structure. Okay. So let's just say, for instance, this is GJ. GJ is the pair that made me money, makes me lots of money. Okay. Um, and I see that I'm in this bullish structure. And I see that price has shifted structure in these zones. Price did pull back to my 78 or 88. So I'm looking for price to come up to these highs, to come up to this high. I am looking for price to come up to this high. In the meantime, I'm zooming in where price currently is. And the first thing I see, without even changing the time frame, is that I have a break of structure. That means this is my swing low and this is my swing high, right? And you can see that price has shifted, gave me a market structure shift because within here, this was structure right here. Okay. So this gave me a market structure shift. So I'm looking for price to pull back. Now, I know I marked up a zone that you can't see. But when I go down in time frame, let's go down to the 1 hour. I can start to see that I'm looking for this zone here for price to pull back to. Did I delete it? I think I did. So with that being said, we got a market structure shift here, right? So now we have bearish structure, which is here. So I am looking for price to pull back into this zone and start selling because I'm looking for price to come back down here. This is a counter trend trade. So what I will do versus, well, I do have a limit set on one of my accounts. But I want to trade my futures account this week with GJ and GU. So once price, and as you can see, my little alert is right here. Once price gets to the zone, I'm going to hop on the chart. I'm going to see if I can find some structure being formed and look for the shift of structure. Once I see the shift of structure, I'm going to look for a order block with an imbalance somewhere up in here, set my limit and wait for price to come back and then sell down to the next low. Remember, this is the swing low. This is currently,
What?
oh,
Sorry.
go
That
ahead.
what you just said, that was you're talking about your doing futures, not this.
It's the same thing.
It's the same?
It's
Okay,
the
okay,
exact same thing.
okay.
Yep. You trade it exactly the same way. Um, oh shoot, my order is ready. Okay, so I'm going to any questions? Because I'm gonna wrap this up. I gotta go get my groceries from the grocery store. All right. So,
No questions for me. I have to watch the first part. I got on like 20 minutes late.
so I am going to post this recording, but I'm also going to post a market structure video for you all to watch as well. Okay.
Okay.
Now, on those videos, just like me sometimes I will do the counter trend trade. Otherwise, I'm just waiting for price to pull back to this zone for the buy because price is bullish, right? Price is bullish up to this high. And the videos that I show you, nine times out of 10, that is what they're going to do. So don't worry. I just wanted to give y'all a quick wham bam, thank you, ma'am, video of intro to market structure. And we'll dive into it. But just know that everything I said, I'm going to say it 1,000 times in these next 3 months. Okay? 1,001 times. All right.
Sounds good. Thank
All
you.
right.
All
Thank you
right.
very much.
Yeah.
Okay, thank
You're
you.
welcome. I will see you all.